50 points.
I think they're uncomfortable with the way my leadership skills of running the bank is, and we have to respect that.
The read-through as far as February business for life insurers is concerned, it's been weak across the board.
Mentioning the broader markets, they were the ones that were in pain yesterday. They continue to do so in today's session as well.
I can tell you, our trust and confidence in the board and in the management is very strong.
Well, that was this day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me, Surbi as well as Manglam. And guys, it's a good-looking screen. If India had to show that we're going to outperform with the kind of cues you got overnight, well, I'll tell you what, the bulls would have taken it if we told them that, you know, at getting 60 minutes, within 60 minutes of getting into the end of today's trading session, you'll be up 30-40 points. You'll have 900 stocks that are advancing. Beautiful looking screen, and in that wrap I'd mentioned that the first 60 minutes may be weak, but after that maybe we could probably see a bit of a recovery, and that's precisely the way it's played out.
Absolutely. This is exactly what we discussed in the morning, right? That we've preempted the fall. On this show 24 hours back, we were telling you that US futures are lower. We were telling you about what that commentary is from Donald Trump that suddenly spooked the street. So we kind of preempted it, and therefore the recovery has come through. The niggling issue is obviously with the bank nifty, and within that with one stock, and we'll spend some time talking about that story on IndusInd Bank, still down 26% by the way, no respite. But a lot of others have come to the fore today. I mean, ICICI Bank, even beaten down names like Trent. I mean, they're all up and about. There's a broad-based move across names like Bajaj Auto, Hero Moto, again, stocks that have been beaten down quite a bit. Overall looking good, and Manglam looking even better if you look at the mid-cap index.
It's looking a lot better in the mid-cap end of things, and it could have been a lot worse, right? But there were a bunch of factors that worked for us. The fact that we underperformed earlier. Yeah. Secondly, we also saw, you know, a lot of buying in domestic-facing names. So if you look at all the stocks that are doing well today, even as the Nifty IT is lower, the domestic-facing names are all doing well. We have Hero Motocorp, which is doing well, Bajaj Auto. You're talking about Trent as well, was underperforming yesterday. All these urban consumption names are picking some pace. And look at Nykaa as well. That stock is higher. You have, you know, a bunch of others. Paytm, for instance, up around 7.5%, 8% on that stock. So a lot of these broader market, specifically urban consumption names, are doing a lot better. And if you were wondering, you know, if it's just that, look at Phoenix Mills, right in the backyard. That stock is up around 7%. Thanga Mill Jewelry, again, up 11%. Kolte Patil, up around 12%. So you do have a bunch of stocks which are actually doing a lot better. The Nifty Bank, which is down about 289 points, if you exclude the cut that we've gotten on the Nifty Bank because of IndusInd Bank, it's actually up by around 200 points. Yeah. So the IndusInd Bank stock has contributed almost 400, 500 points on the downside for the Nifty Bank. And despite that 400, 500 point downtick, the Nifty Bank is down by only about 300 points. So all things said and done, there you have it, 450 points down on the Nifty Bank led by IndusInd Bank. Had that not been the case, it would have been higher by about 100 points. Then it would be a lot better than what it's looking, which is in itself not particularly bad.
Well, that's right. You know, and if you pull up a couple of more names, Paytm. Yeah. There's a big volume surge in the last few minutes. The stock is now at the high point of the day. It's up close to around 7%. And the other one that's making a fresh 52-week high near to that is Welspun Corp, up close to around 3%. A play on the schemes here in India with regard to the ductile pipes business, and globally as well with regard to its pipes business for, you know, Trump's dream of producing higher amount of oil in the United States. So that explains why that one as well in this sort of a market, close to a 52-week high.
And one more sector, you know, there was this whole, when the market falls, all kinds of chatter starts. So the chatter was that now real estate sales will get hit because the wealth effect is eroding. Look at the property stocks today. Phoenix is just one. I mean, look at Macrotech, look at DLF. Yeah. A lot of these other names, I mean, Anantaraj, etc. A lot of the names from the realty side of the market are also doing fairly well for themselves. So it's turning out to be a good afternoon. Let's then straight away get to, I think we'll get to Mitesh in just a bit. Yeah, we have Mitesh with us. So let's as always, start with him and get some trading calls going for the last hour. Mitesh, it's the bulls have resurfaced. It's you know, they're holding the baton for the time being. What are your trades now?
Good afternoon. So I think, you know, early in the day I was talking that we should hold 22,300. We got a low over there, and then the recovery has happened. My only worry is that in this entire recovery, you know, the Nifty Bank and I think IndusInd Bank effect is also there in that. The Nifty Bank and the Nifty IT index are still weak. So we're not playing aggressively on the recovery. But yeah, I think it does suggest that the immediate shorting opportunity may not be there. In fact, the Nifty, if it can clear and get past this level, which is around 22,540 odd, then I think we might see more strength come in. So waiting for that to happen. Till then, I think just keeping our powder dry and looking at stocks where you can take some kind of trading positions.
Okay, all right. Let's talk about a couple of stocks then. What are the ideas you have for us?
So, Nigel, the first stock on my radar today is Glenmark. After that big reversal which happened on Wednesday, as the markets kind of declined, Glenmark was sideways and is just on the verge of giving a breakout, waiting for the stock to clear 1407, 1408. Buy about that, keep a stop at about 1390. And the first target should be around 1440 on the upside. The second stock which I like is Godrej Properties. Again, would want to see some kind of breakout come into place, which is about 2070. So it's at about 2055 right now. So buy about 2070, keep a stop at 2040, and 2150 should be target on the upside.
Do you have a view on Tata Communications? That stock is higher today on account of a brokerage note, but right now it's seeing a further extension of gains, up around 8.5%, Mitesh.
Tata Communication, I have not looked at it today, Mangalam, but otherwise I've been tracking the stock regularly. So I think this big reversal which has happened should be good. And now, if the stock can sustain above levels of 1464, which is doing right now, I think the upside targets could be around 1550 here.
All right, take that point, Mitesh. We'll come back to you in an hour or so. But just the IndusInd Bank stock, it's been the stock of the day, down 26%, the highest intraday fall on record, as the company has disclosed incorrect derivative accounting that concealed a loss of over 2,100 crore rupees pre-tax. Ritu caught up with Ashok Hinduja. Remember, the stock is currently at the low point of trade, may enter F&O ban given the sort of open interest jump that we've seen as well. So the chairman of the company, IndusInd International Holdings, which is Mr. Ashok Hinduja, joined us on the channel. Ritu spoke with him, and this is what he had to speak about the review of the derivative portfolio, along with the one-year extension that the MD, Sumant Karpalia, was given by the RBI.
Let me tell you, the banking business, as you are aware, is in lending and borrowing. Globally, at various times, the banks face the problem much bigger, 5 times, 6 times the size of this bank. They have seen these problems. As rightly asked, whether I am aware, yes, I am aware only now when I have come to know. Because me as a board, I am not a board director, neither I am a management. So this question, why they came to know, when they came to know, why they have not corrected and not informed, it will be very difficult for me to answer that question. But I can tell you, our trust and confidence in the board and in the management is very strong, because we have seen, IndusInd Bank has seen in last 30 years various problems, and it has all been handled properly by the boards as well as by the MD and the management then. And this problem will get resolved, because as we see, their financial numbers are very strong. As you know, the operating profit for 9 months is 11,000 plus crores. The hit of this 1,500 crore or 1,600 crore is not much. And these are derivatives, technical difficulty problems, as we understand. So they'll be able to take it. And my suggestion and request to the shareholders is that they should not get panicky about this. These are normal routine problems. But yes, I understand that their concern is that why they were not informed earlier. It depends, it all leaves the intention and the integrity of the institution. And banking business is the integrity, trust and faith. And I'm sure they may be having some difficulties, some problems. It only the MD can respond to this, which I think he will definitely do it. But there is nothing wrong in their system or in their management. Some professional, somebody must have done some error, technical problems, which we don't know. So as far as the promoters are concerned, we have full trust and our support to the institution will always be there.
Mr. Hinduja, you said, you support the management, you support the CEO, you say the financial hit is not very large, but what the street is very much concerned with is the credibility issue. And as you yourself alluded, it's not just this derivative portfolio discrepancy that has come to light. Just before this, we saw the Reserve Bank of India only giving the CEO a 1-year extension versus a 3-year that was sought. Before that, in the past, we saw the CFO resignation. Even before that, in 2021, there was that issue of the microfinance subsidiary and the glitches thereof. So there'd been a series of issues that investors have been concerned with. Do you not believe that there have been lapses at the management's end?
See, as I explained to you, the bank is in business of various different segments. Microfinance is one. Microfinance, the business of microfinance, as we all understand, depends on the seasonal, on the political election basis, state-wise. They face problems. As far as the management is transparent and he has given the provisioning that there is a problem, the more transparency he has given, the more market has hit him bad. So I am myself astonished that whenever a management is giving a provisioning and seeking that, yes, we will look into it, there is a problem, market should, on the contrary, appreciate that the management is transparent to come out and make a provision. It's not, as I read in the papers, it's not only once. They have done the provision in Q2. They have made a provision in Q3. And now this also, the problem which has come out, has not been identified by anybody, neither the auditor, it is the management which came out and brought to the attention and disclosed it. So as far as we promoters are concerned, yes, these problems have happened, and in this such a type of institutions, it will keep on happening in many other banks also. But we should give opportunity to the management to clarify these situations when they come on the media.
Well, we hope, Mr. Hinduja, that the management will come on and clarify this further because, the bank, the stock has erased, almost 18,000 crores of market cap on the back of this news. And like you say, transparency and trust in banking is very, very important. And there has been a near 6-month delay in making this disclosure. So what are you going to say to investors that there will be no more such shocks in store? How will you allay these concerns?
See, as I told you, I'll not be able to answer this because I am not into the awareness of that. So when Mr. Suman Katpalia may come for interview at your channel or some other channel, these questions should be put to him, and I think he will have fair answers to respond to that.
But Mr. Hinduja, as the promoter, now currently the hit is estimated at anywhere between 1,500 to 2,000 crores, while the capital adequacy is comfortable at 15.18% Tier 1 capital. If needed, will you as a promoter look at further capital infusion into IndusInd Bank to support them?
Okay, let me also add to this. Now it's more than 30 years this entity bank has come into existence. 3-4 such cycles have come. It has come in 2008. It came later in the post-COVID time. Always we as promoter have supported irrespective of the pricing. If you recollect, there was a capital raise by the bank when the warrants were issued at 1,700 rupees, when the market was 1,900 to 1,000 rupees. And the market was saying the promoter will not invest. But we proved the promoters invested irrespective of the more than 40-50% price difference only to support the bank. Today also, after this provisioning, as I understand, the capital adequacy will still be over 15%, wherein minimum requirement for any bank as per the regulator is 12.5% to 13%. But irrespective of this, as and when further capital is required, promoters, shareholders are high net worth, global shareholders. They are always with the company since last 30 years. They have not exited. They have neither sold their shares. They are seeing long-term opportunity, and also they are pushing to the company, to the board, that please come for more opportunities. And that is how we invested and went through the insolvency route of the Reliance Capital. As you are aware, was also successfully achieved. And you may be knowing only yesterday, 26%, the Indian part equity has already been fulfilled, completed, and 2,500 crores for the 74% equity also has been injected. And hopefully this transaction will get completed 100% by this Thursday.
Okay, all right. That's Mr. Hinduja himself saying that he's committed to the bank, and in fact, if he gets all the green signals from the RBI, he could probably look to increase his stake as well. That he's been saying. Gurmeet Chadha, managing partner and CIO at Complete Circle, joins us on the show. Well, Gurmeet, you know the problem is this sort of news flow as well. It's not good at all, and it's coming a day after the bank's MD got an extension for a year. So the street is feeling that. They're clearly hurt with regard to this, because the stock started off lower and now it's down at the lowest tick of the day, even after the promoter coming in there and speaking. In a bull market, maybe you could get away with a smaller cut, but now we know the markets are a little bit tepid, so the stock is at the low point of the day. What's your view? It's more than valuations, though valuation-wise the stock looks okay. Your view on IndusInd Bank, and what do you like from the banking pack?
Hi, Nigel. I think, I'm a little surprised that they should have given a little more clarity on the nature of the loss. Just saying that it's an unhedged derivative call, and earlier they were taking, on a hold to maturity, and now, because this has been building up, and, if you see, there are a lot of banks, because I've been a banker, they offer NRE deposits in dollar terms, not NRE, but NR deposits in dollar terms, giving some leverage to clients, right? And maybe it's because of that, some part of it is hedged by Treasury. It may not have been hedged. So I think the market would probably want to see whether it's a one-time. Also, they would want to see that if this, because this is an internal committee which has said that the impact is 2.3, what if it's a little more? I think there has to be a little more clarity, in my view, on the nature of the loss and what was the practice earlier in terms of Treasury, and how they will go now on a mark-to-market basis, because apparently this has been accumulated over a period of time. Even if you see their deposit growth, the NR deposits grew very sharply, both in Q3 and earlier. And typically second half of the year, you see a surge in deposits. I've been a banker myself. So I think it's got to do with some of the dollar structures they offer in deposits, with some leverage they give. A lot of banks do that. A lot of multinational banks also do that. So a little more clarity and some reassurance that, this is one time, and, I think that would probably help and cool off the sentiment. But it's an avoidable thing. That is always the risk with financials. You wake up one morning and suddenly see, 99% of us would not have anticipated this. Something like this can happen. So I think, go with the, more gold standard ones, because risk management, one lapse can cost you 18,000 crore market cap today. Right? It's almost 25-26% gone. So stick with some of the larger private banking names, because there could be some pressure on some other smaller banks also, which rely a lot on NR deposits. And I think you have to be a little careful here, because, one thing obviously leads to the other. So far, there's no run, etc., on deposits or something, which is a large bank, well capitalized. But stick to large private sector banks and, maybe top one or two PSU banks.
It's a 26-27% fall today, Gurmeet. If you look at it over the last, year or so, even if you look at the decline from its 52-week high, it's nearly halved. With all of this now out in the public, with, a lot of them worried about how much of it could not be in public domain as well, would it make sense to maybe look at the valuations once again, try and put in, the fundamental analysis hat and say that, okay, 60% down, maybe the risk reward at some point is in favor? Or given the sort of, market mood and the disappointment that the street has had, it's a typical no-go?
No, I would just say just wait, in the sense that, there'll be more clarity, as I said, on exact details and the nature of the loss. What were the practices earlier? What are they going to do now? And then there is an external agency which they said the only good thing is they disclosed it themselves. They didn't wait for the results. and I know they would have figured it out. And I think it has got to do with the sharp movement of the rupee, in my view, and a lot of NR deposits. That's what my first sense is. But it would be speculative for me to do attribution analysis right now. But just wait, in financials, Manglam, you can't typically work with price book see. There is a reason a lot of PSU banks trade at 0.4, 0.5 book value. Right? The reason is that the street somehow does not trust your risk management framework. And there is a reason some banks will trade at 2 to 3 book value. Also, there's been a history of, errors in the last few years. First was they accidentally disbursed money in some 80,000 odd accounts. I don't know how that could have played out. That also shows you some laxity. Then there were issues on microfinance portfolio, which they've had. So there's been a series of issues. And I always say that the street knows what is happening, especially with financials. The price tells you a lot. So it's not been underperforming now. Look at 4 or 5 years now. Somewhere, if there is, this business is on trust. Somewhere, if you feel the risk management is lax, the street doesn't reward you. It's happened with a lot of NBFCs. It's happened with a lot of banks. So my sense is let it come out, let it play out. And market right now is, there are a lot of good opportunities across pockets. You don't have to just, get emotional about just one particular script. Right?
I was coming exactly to that point. This is not a roaring bull market where you have to look for a tier 2 or tier 3 bank or NBFC or a stock in that sector, right? This is not that kind of a market. You're getting leaders with, like you're saying, gold standard, disclosure quality, corporate governance quality at a very reasonable valuation. So then why will the market, force itself to look down the curve, so to speak? So take your point on IndusInd entirely. Very quickly, today's shorter conversation, it was all taken over by the IndusInd management, not the management, but the promoter really. But very quickly, like you're saying, the market's interesting now. It's a good time for stock picking. So leave us with maybe one idea, anything new that's come on your radar, beyond some of the names like solar industries and all we've discussed in the past, but anything new?
So, Surbi, we are looking at some pockets, as I said, being a little constructive on waste management for a while. I think water could be a big theme, both in terms of, and this is not too much dependent on tariffs. A lot of the export book is also Middle East for a lot of these players. And then there's a domestic government push, whether it is Har Ghar, Nal, Namamo, Ganges, and so many projects the government is pushing. And then you have, localized cleaning drives going on in NCR and other regions. So I think we like Vatek Wabak, which is into water management. The stock is corrected from 1900 levels. Valuations are reasonable. I will not call it cheap. We are looking to add that. We are also looking at some more opportunities in waste management, companies which are into smoke guns, companies which are into air purification, and an extension of that, are there any ancillaries to it? So that's one space we are researching, and then when we find more names, we'll definitely discuss with you.
All right, we take that point. Gurmeet, always a pleasure speaking with you. With that, we'll step into a short break, and on the other side, we'll have Dinshaw Iran here from Helios Mutual Fund talking about the markets, a lot of stocks, and maybe getting a perspective on the banking space too.
Welcome back. Well, we're looking at the market, which is trying to find its own ground, its own recovery. And by the way, US futures, should point out, they're all higher now after yesterday's big slam dunk. In general, US futures are up between 0.25% to about 0.4% thereabouts. We have Dinshaw Irani joining in from Helios Mutual Fund. Dinshaw, always a pleasure. Good to have you on the show. What a roller coaster ride. And it's really testing times for investors. Investors have kept the faith so far. But let me ask you about financials. Now, we know that as a house, you folks have really liked the financial space quite a bit. Today, the headlines are being dominated all by one entity and one issue of maybe delayed disclosure or not adequate disclosure, etc. So how do you sort of look at the entire universe here against the present market backdrop?
So, very good afternoon, Surbi, and a very good afternoon to you and your team and your viewers.
I must say, very interesting glasses before we get started with the market conversation.
I wear them to counter the markets. They're red in color, so I'm hoping the market
absolutely
it has.
Go for it.
Okay, thank you. But anyway, so talking about financials, thankfully we were not in that particular stock that you talked about. We never used to like that stock much because of the exposure to the microfinance segment. And actually that, I don't know, the provisioning bit, where it hit them from, but the whole question now was, and then the fact was earlier, I mean, if you look at the problems that the bank has been facing, I mean, the massive write-offs that it started taking in September itself, and then December wasn't that a great quarter anyways, and before that the CFO quit, and then the extension of only a 1 year given to the MD as such. So all these things are not pointing in the right direction. And the regulator, I believe, may have been aware, and that's why he's been so strict with that bank per se. So this is what, that's why when I tell my investors that the sector that we like private sector banks, but we're very specific in that. We want to be very clear wherever the asset quality is a question mark, you should never be touching those banks. I mean, these are the times when things come out. A rising tide can raise all boats, but when the tide goes out, you know what happens, right? So that's why you have to be very careful here. Having said that, we are very bullish on the banking sector. I think now the things are even working in their favor because the new governor is, the first thing that he did was ease liquidity in the system. And that helps the sector in a big way, cut down on interest rates. I mean, we started doing that, and probably that is what they'll be doing going forward also, because the economy needs a push, and that's the only way they can push it. So I think things are laid down perfectly for this sector, and we continue to be bullish on the lenders in the private sector. The PSU, we like only one particular bank, and NBFC space, we like a couple of them, but that also is very specific.
All right, take that point. Just a word on your glasses, you know, Dinshaw, what they say about rose-tinted glasses, right? When you're wearing rose-tinted glasses, even the red flags appear just like flags. So, you know, be that as it may, I want your thoughts on Zomato, largely because you've been positive on the quick commerce space. That stock has seen a big dip from the highs, and not just Zomato, because of which even Swiggy has seen a big drop. The entire profitability in quick commerce space seems to be coming under a question. What are your views on that?
So here's what it is. The fact is that, so actually Swiggy, we've been out. I mean, our latest fact sheet is out, so you can see from that. We're out of Swiggy. We didn't like the way they reacted to the competition, which is Zepto in particular. I mean, fighting discounts with discounts is not the right way to go. I think Zomato did a fantastic job in the sense that they want to fight competition by way of strengthening the backbone, which is basically bring forward the CapExes or 2-year CapExes, run them into a period of 8-9 months. And that's what you want to look for, because you want to have your dark stores in place. You want to have your logistics in place. And that's what we were looking for. But the reaction of the other player was not that great. So we moved on to that. But having said that, we are thoroughly convinced on the model. We've seen it working out perfectly in China. I mean, look at Meituan. I mean, the stock is doing phenomenally well out there. In fact, market cap of what, $70-80 billion. So we're not even close to that. As a whole industry, we're not even close to that. So I think we got a long way to go there. And frankly, I mean, we're not different from the way the dynamics of the industry works in China. It's the same. There are 2-player market out there. Quick commerce, there are quite a few players there, but Meituan is a big one. But anyway, having said that, I think the potential out here for that stock to grow is really huge as such. So we continue to be fairly invested in that stock.
All right. Hi, Dinshaw. Good afternoon. Good to see you. Dinshaw, from private banks, HDFC Bank, that's been one of the largest, is the largest holding, right? HDFC
Yes.
Bank, ICICI Bank, both of them should be a few more in there, or these two are most of it?
No, Kotak also is there with us, so, and the private
All
sector.
right. All right. So private sector banks is something that you like. All right. Let's focus on a couple of other themes then. Crude oil prices have cooled off. Are there a couple of themes that you like? I recall in the past, I think you had some mild, small exposure to OMCs. It's becoming very difficult to trade that counter though, or invest in that, because there are too many moving parts. That's positive for the macro perspective, and the stock markets like it. But anything you're playing on that front, because crude oil prices moving from $80 to $70 per barrel is music to the ears of bulls.
Yep, that's true, Nigel. In fact, we have a small exposure, if you will, and that was the whole reason for that exposure. The way the crude oil prices fell off, we wanted to make way for one of the particular names in the OMC space. It's there on the on our fact sheet, so you can very well refer to that. So yeah, that and the fact that the way US is going, I think it's more of a call on whether global demand for crude will be shooting up or no. I don't think that's going to happen. In fact, if you look at the refining margins, the Singapore refining margins, they've held up pretty well. So I think that's one area that one should be looking at. But however, having said that, to make way for such an investment, we had to, we churned our portfolio a bit. And one of the things that we turned negative on was IT per se. And I think somewhere in Feb itself, we started moving out of IT. We did raise a lot of cash during Feb. And fortunately, it worked in our favor because we saw that the market tanked off in the last particular week of Feb. So we refrained from investing that cash. But in March, we've been fairly on the ball. I think we've run out half of the cash that we raised, and we've invested most of it in these new names that I keep talking about. And increasing our exposure in banks too. So.
All right, increasing exposure to banks. You'll have lightened your positions on the tech space, and you'll raise some cash in February, which you'll have deployed close to around half of that. Got it.
Not lightened. We became zero in
zero
tech. We just
IT.
Got one name.
Tech.
Yeah.
Okay. All right. What about the stock marketplace? Y'all, I think you'll had lightened some positioning. I think on Motilal, I think you'll had something over there. MCX is something that you'll held on to, I think. Anything else you'll have? Because these stocks have come off drastically and the market's going to go into a bit of a tizzy. Then, there's been a lot of selling out there. So tell us your view.
So we were lucky. I mean, we moved out of a few names and we lightened ourselves on a few. We're not in a rush to add those names back, frankly. I mean, Nigel, because I think the valuations is what concerned us, and that's why we moved out of those names. And we're sitting pretty. We're not adding to any of the names that you mentioned per se. But yeah, we're waiting for opportunities because we're very convinced on the long-term story in this particular segment. The capital market plays as such, as we call them the gatekeepers to wealth, if you will. And I think that's where India is going, right? I mean, the economy is going to grow, per capita is going to grow, and this is a sector where they're going to come to. So that's what we're waiting and watching. We're not increase anything out there. Such.
If I were to tell you to pick a side, I think you'll be tilting more towards bullish than bearish as of now, post the pullback. Is that correct?
Yes, that is true. And it's not pure gut feel, Nigel. In fact, we saw, if you look at the history of Nifty, 30 odd years of Nifty, there have been only 9 instances when Nifty has fallen more than 20%. And all these instances, there's been a reason. There's either a global crisis or a domestic crisis or a scam which has come up. I don't see that working out this time around. I mean, if anything, things are pretty decent right now. So if you call the President Donald Trump as a crisis for the world, then that's a different story. But I don't think so. I think he's a very smart businessman, and things will work out the way he wants them to. So things will even out here. So those corrections are not in the pipeline. The average you saw this time around, the fall you saw in this around 15-16%, which is close to the medium of 10 and 20% kind of correction. I think we are done and dusted.
Is there anything new that has caught your fancy?
Not really. I mean, oil and gas was one, which I talked about. Otherwise, we we don't believe in bottom fishing. We don't believe in getting new ideas just because they've corrected a lot. Yeah, the domestic capex plays are something that we're looking at. We've been nibbling at that sector per se, and I think some of the companies you'll see whenever the March fact sheet comes out, you'll see some new names in that per se. But that's purely because of the growth that they offer.
Got it.
And the comfort on valuations.
We'll keep an eye out on the fact sheet when it comes out. Dinshaw, always good hearing your thoughts. Thanks a lot for joining in, and good to hear that you're sounding more optimistic on the markets post raising some cash. Thanks a lot for joining in. Well, for the time being, we'll slip in a short break. And as always, Nimesh is waiting for us on the other side. He'll tell us what he's picking up in D-Street Chatter. Don't go anywhere. Welcome back. Nifty holding with a gain of 30 points. The story, those in the broader markets, you have 850 stocks that are advancing. Nimesh joins us to help us out with what he's picking up. Nimesh, if someone told us early this morning that you'll have some green on the screen and the breadth of the market wouldn't be so bad, I think you'll take it. What are you picking up in terms of flows?
Absolutely, Nigel. You know, clearly a matured reaction from the Indian equities, and the way we sell off yesterday, I think we preempted a large part of that US move. Fact that, US was down so much and still we are in the green, that shows the kind of, maturity of the pullback we're seeing for the Indian markets. And again, from a flow perspective, the feedback is there is not big flow on either side, which means not a big selling, not a big buying as well. So we saw yesterday the first signs of, a bit of FI selling, tapering off a bit, and that seems to be the day. That seems to be the case today as well. So that's a flow perspective. But again, I guess today's fall is largely led by financial. If there was no big accident like an IndusInd Bank would have been pretty much in the green throughout the day. However, in IndusInd Bank, the feedback is there is very aggressive selling from domestic mutual funds. So the sell flow from the domestic side could be largely attributed to IndusInd Bank. So the post-market data on the delivery-based selling in IndusInd could be quite interesting to watch out for. On the other side, there is a bit of buying as well, is what I understand, at lower levels from larger HNIs in IndusInd Bank in today's state. So that's been the big talking point and the big stock in today's market. The other sector which has done well today is the Mumbai-based real estate names. All have seen a bit of a pullback rally, a kind of a relief rally, so to speak. I guess the street was a bit nervous ahead of the Maharashtra budget, and the fact there is no negative surprise. You've seen a bit of a short-covering rally or a relief rally in the real estate, in the Mumbai-based real estate names today. Technically, 21,800 is a level to watch on the downside. But Nigel, the feedback is, at least in the very near term, watch out for in the US market. Don't look at the US equities, but look at the US bonds and yield. That's going to be a big trigger and a cue for Indian markets, at least in the very near term. So that's the feedback. But broadly, no large participation is what I understand, barring IndusInd Bank, from large institutions today.
Yeah, those yields, obviously, Nimesh, they have been moving down. Actually, I was looking at rates just a while back. The US 10-year is still below 4.2% risk aversion, right? So that's why everybody went running into bonds overnight. So let's see how that plays out. But what about individual stocks? Of course, IndusInd has hogged all the limelight today. But what are the other stocks on the radar for you?
Sure. So in terms of individual names, the first stock is Colte Patil. A big move in that name, and the volumes are also surprisingly on the higher side. I guess a bit of excitement ahead of the board meet, which is scheduled for March 13. What I understand, a leading global private equity investor can potentially invest into the company, and which may trigger an open offer as well. So watch out for Colte Patil on the board meet on 13th for fundraising. So that's the first stock. Second name is Shriram Finance. Within the financial names, especially the NBFC names, this is one stock which is very aggressively bid by larger institutions today. So expect high delivery volumes, and the recovery what we have seen intraday is largely backed by very large FI buying. So that's the second stock. The third stock is Segality. Again, the stock has underperformed in the recent past, but even at these levels, while stock has marginally recovered today, there is consistent selling in Segality from a very large US-based fund. That's the overall feedback from a flow perspective. And the last is a couple of stocks where there is delivery-based buying today. HDFC Life, after a long time, some bit of buying seems to have emerged in HDFC Life at these levels. And Macrotech, though it's part of the pullback rally, but in Macrotech there is genuine buying as well, is what I understand from larger institutions. So both HDFC Life and Macrotech are buzzing on the back of very strong buy flows.
Take that point, Nimesh. Thanks a lot for that. And you spoke about IndusInd Bank. I was just looking at some data coming in from the exchanges. As of 3 p.m., the deliverable quantity on IndusInd Bank is well past 2,000 crores. So if you club both BSE and NSE, look at the volume-weighted average price, then you might end up seeing around 2,500 crore worth delivery-based selling on IndusInd Bank itself. So that's something we'll most definitely keep an eye out on. The total volume is obviously much higher than that, but 33% of the total traded volume right now is marked for delivery. So over 2,200 and 2,300 crores is what the delivery-based selling that we can see in IndusInd Bank itself.
Okay, all right. That's, of course, IndusInd still under pressure. No sign of recovery whatsoever. Let's go back to Mitesh as well and get some final thoughts in terms of stocks you can trade either on the way up or on the way down, with, of course, reverse trades tomorrow. Mitesh, what's the final advice? Just review the indices as well, and then any final stock ideas.
Yeah. So on the indices, my sense is that, I would avoid them, but look at to buy only the Nifty if it comes closer to what we had the low today at, which is about 22,300 levels. That about, I think the market is not giving you any conclusive bias to take positions, and therefore, just stay put. And on the stock side, BTST and Bharti Airtel is what I would recommend. Keep a stop at 1659, look for a target of 1680 or thereabouts. And BPCL and the refining stocks are looking good on the charts. In fact, that's one area I would be more comfortable trading. IOC, BPCL, HPCL, etc. So BPCL is a BTST as well, with a stop at 262 for targets 270.
Right, Mitesh. Thank you for that. Thank you for joining in and giving us your views. We'll speak to you tomorrow as well. But let's welcome Jay Bala of cashthechaos.com on the show as well. Jay, after the recovery that we've seen from today's low and the consolidation that we saw yesterday, along with the pullback that we saw all of last week, fair to say that we made a bit of a bottom on the frontline indices?
Hi, Nigel. Sorry, Mangalam. It's good to be here. But I think the market is doing exactly what is expected of it. But I don't think it's a durable bottom. The risks for the market still remain elevated. We had a close from the U.S. markets last night. That's the U.S. markets got a signal from the oldest school of technical analysis, the Dow theory, giving a sell signal for the U.S. markets. Although it's just it doesn't have an amplitude, it just tells you to preserve capital. So coming back to the Nifty, I see a continuation of the bounce that we're seeing from the low that we saw a few days ago to somewhere close to about 22,750 to 22,900. And similarly, the mid caps and the small caps are likely to take out the current highs registered for March. So all sectoral indices are also doing that except the banks. So we got last week, I said the best place to fish for a counter trend rally, one of the four was the metal sector. Metal sector and capital goods have done pretty well. So that theme still continues. But there's another risk that's coming for the global markets. That's the Brent crude. It's that we have been anticipating it to drop below the September 2024 low. That's been registered just a few days ago. But the next low that's likely to come through for Brent, that's likely to be a final low in this leg. And then that'll be the beginning of a starting move somewhere towards $99 to $100 for Brent.
You're seeing Brent go to $99 to $100?
That's right. Oh. It's got a final sequence of lower low to finish. Once that's done, I'm anticipating a reversal to come through. That reversal will take it back to $99 to $100. Maybe the ceasefire that's been negotiated with Russia and Ukraine, or this new Hamas and Israel, that'll be violated. That's what the crude market is.
Yeah, that's a big call, huh? You're calling $30 of a rally on crude. I don't think any of the fundamental guys are talking about that, but clearly you're seeing something that the charts are indicating. Just allow us a minute, Jay. We'll come back. We want to explore that Nifty call as well. I want to ask you, what's a better trade then? Do you play long on this counter trend bounce on the way up, or do you wait and get ready to short at those higher levels? Going back to that in just a bit. But we also have to look at pharma stocks, and Vinny's been waiting by quite patiently. The export data for the pharma sector is out for the fourth quarter. What is it saying? I mean, there's so much of talk on tariffs and whether exports will continue to be robust or not, Vinny. But what are the numbers for now?
So as of now, seems a decent number specifically coming in for CDMO players. But let me take you to the key important highlights that have come in. One, for Q4 overall and Feb 25 specifically, we're seeing special drug opportunities like Revlimid, which is important for these companies. Myrbetriq, that is an important drug for these companies, a generic version of that is supporting the pharma growth this time. Especially for Zydus Life, Revlimid sales have been something that has really led to a good growth for Zydus Life in terms of exports, whether you look for the month of Feb or even for Q4 so far in terms of FY25, they've seen a very good growth. Highest ever exports that they've seen for Zydus Life, 1,240 crores in the month of February, and this is since the inception that they started supplying Revlimid. So that's an important point. Laurus, Syngene, both of them on the CDMO side have managed to see very, very good growth coming in. For Laurus, around a 62% growth on a quarter-on-quarter basis. Syngene also around a 65% growth, and this is something that is leading the growth in the CDMO players. Laurus, mainly the growth is led by the new CDMO compound supply which they started, and this was to Pfizer of around $17 million. So that is something that is supporting the growth, and the ARV formulation that has surprisingly done well in this export data, at least what is indicated this time. So Laurus is one stock that we're seeing buzzing in trade today also and holding on to good gains even now. Generic products, that continues to be under pressure. So maybe in Q4, overall those generic sales which have been under pressure in Q3, Q2, that could be under pressure even in this quarter. So generics is something that we'll keep an eye out on. But Syngene, Laurus, clearly outperformance coming in terms of export data there. Lupin for Albuterol, which is the inhalation product, that has seen a very good growth. Cipla is 103% growth year-on-year basis. Lupin 41%. A decline is what they're seeing on the other hand. Albuterol, surely they gain market share. Overall, Lupin has seen a bit of a subduedness in terms of data points coming in. Other pharma companies who have given a good data point is Zydus, Sun Pharma, which have seen good numbers on a quarter-on-quarter as well as year-on-year basis. While Aurobindo Pharma has seen a bit of a decline sequentially. Ipca also seeing a bit of a decline, as well as Unichem seeing some bit of a subduedness, and DVs also not much of an exciting set of numbers in terms of exports there.
Okay, all right, got that. Vinny, thank you very much for that. We have to take a very quick break. As we take that break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app from either the Apple Store or Google Play, or you can simply scan the QR code that's just coming up on your screen. So make sure you download the app and then enjoy the best in business.
Welcome back. Mildly green on the Nifty. We are seeing good gains come by on the mid-cap end of things. 900 stocks still in the green. Allied Blenders is the one which is now suddenly moved to the high point of trade, so we'll keep an eye out on that. A lot of these alcohol stocks will be in focus. The Telangana budget session starts tomorrow, so we'll keep an eye out on that back. And Kalyan Jewellers is the other one. It's seen a big cut over the last few trading sessions. Right now has seen some recovery from the lows. Currently up at the high point. A 6% recovery is what we've seen from today's low on that stock itself. Let's get you some market opinion. Earlier today, we spoke with Morgan Stanley's India equity strategist Ridham Desai. He said that in Indian, the Indian fundamentals are improving and the bear market may actually be at a turning point. Let's hear him out.
In February, a policy pivot, which I will say is one of the biggest in my career, going back 35 years. The RBI has put a three-pronged correction: cutting interest rates, committing itself to liquidity and also starting to lift the regulatory burden on the banking sector. The RBI policy suite, the market has just ignored this, what I call as policy pivot. India's policy environment today is far more certain than the rest of the world put together, whether it's US, Europe or China. So you want to buy this policy certainty, and I think investors will buy it. Our retail investors get it. And I suspect that February may have been record inflows. And a lot of people have been quizzing me about when will retail give up. And I've got tired of saying this, they won't. Now, if you look at the foreign portfolio position in India, they are the most underweight they've been on Indian equities ever. And most importantly, India is now a low beta market, unlike the past. So if you go back 10, 15 years, India used to be a market which had a beta of more than 1. And for your listeners, that means that India used to go up or down a lot more than the world. Now, if the world is in a trickier position than it has been for many years, the likelihood is that India will outperform. India is like consumer staple stocks. It will outperform a bear market in the world.
Okay, interesting commentary coming in there from one of the big bulls, Rhythm Desai. But we have Jay Bala who's joining in, and he's been right and he's been bearish. Hi Jay, you're in the pink of health today, I see. Good to see you as always. Tell us, the Nifty, it appears it's quite resilient for the last few trading sessions. What do you say? It's just the pop before the big fall? If yes, what are the levels you're looking at? Point number 1. Point number 2 is, Jay, I hope you're wrong on the crude oil call. I believe you're saying that crude oil from here on is going to be spiking big time. My commute, I use a petrol vehicle, so that's my only reason. But tell us about the Nifty levels and crude oil.
Yeah, see, Nifty is today's low is exactly at a 50% Fibonacci retracement of the short-term move. So the corrective rise is still pending. So I'm still anticipating this move as a corrective move. Even if it were to stretch to about 23,800, which I don't anticipate it to, this will remain within the realms of a corrective move. When it comes to crude, I'm anticipating one more lower low in the very short term, probably in the next 2 to 3 days. The next low will be below the recent low registered, below the September low. And then I'm anticipating reversal to come through. Once the reversal comes through, that will be a confirmation that this market is heading, Brent crude is heading to $99 to $100. And the early indications are for the markets to, crude markets to turn from here after one more lower low. And so this is part of a longer term cycle that's happening. And I know that's too early to talk about it, but I'm anticipating Brent crude to touch $250. I mentioned this some time ago last year too, but that is in the realm of 2026, 2027. We'll talk about it when the time comes.
All right, we'll take that point. We'll talk about that when the time comes. But what we'll do is we'll, leave you be for now. Once the clock strikes 3:30, we'll speak to you on markets forward as well about the tomorrow trade and recap trade today as well. But let's try and recap today's trading session as well. If you, started out believing that, there would be a big cut, we opened with a big cut. Thereafter, there was a lot of recovery. The Nifty ended mildly in the green, as did the Sensex. There was a sharp recovery of almost 200 points on the lows on the frontline index. The mid-cap index was really the toast of today's trading session. After underperforming in yesterday's trading session, we've seen some recovery out there. A 400-point uptick is what we saw on the mid-cap index. 900 stocks advancing, 1,700 stocks declining. The Nifty Bank was the big underperformer today, and the biggest reason for that was IndusInd Bank, single-handedly dragging the Nifty Bank by almost 400, 500 points in today's trading session, ending today's session at the lows. Sold off at open, kept selling off through the day and ended at the low point up until 3 p.m. The delivery-based selling on IndusInd Bank in excess of 2,200 crores as well. 27% lower on IndusInd Bank. That was clearly the stock of the day on the downside by miles. Infosys ended lower as well. Bajaj Finserv and M&M were a couple of notable losers. But the top gainer today was the top loser from yesterday. Trent up 4% today. BPCL did well. Sun Pharma, ICICI Bank and Shriram Finance, along with, say, something like a Hero Motocorps or Bharti Airtel and BEL. Good day given the circumstances.
And even better day for the mid-cap index, Mangalam. You had more number of stocks declining than advancing, but par for the course, because you had the mid-cap index that was up close around 0.8%. No, I haven't got that wrong. That's correct. The Nifty did pretty well. The last tick is at the high point of the day, as was the case with the Nifty mid-cap index as well. Chennai Petro spiking away, 8% up. Paytm up 7.5%. Kalyan Jewellers up 3.5%. Welspun Corp up close to around 3%. GMR Airports as well did very, very well. On the flip side, some stocks didn't do well. Ola Electric continues its losing ways, was down 5%. HCC was down close to around 3% or thereabouts. But the end of the trading session, well, it was a very, very resilient and good performance for the Indian markets. We recovered from the day's low and ended at the high point of the day. On that note, though, we'll wrap up on this edition of Closing Bell. Markets Forward comes up next. Stay with us.